Joining us this morning, Muddy Waters research founder Carson Block is with us. Carson, it's great to have you. Thanks for the sneak peek at this. I'm not sure what you can tell us ahead of the conference, but what can you lay it on us?
Well, I can't tell you anything about my idea, of course, because that would disadvantage the people going to the conference. But I would like to talk up the conference for a moment. This will be my first time speaking at the Robinhood conference. And Robinhood is an anti-poverty organization that focuses on alleviating poverty in New York City. It's been around for 35 years, and it's a fantastic conference. I will be on the same stage as Steve Cohen and Stan Druckenmiller, Ken Griffin. So great conference, really excited to be there. And yeah, I think I've got some interesting things to say when it's my turn to talk.
Yeah, well, we had Tudor Jones on yesterday, and he said the same thing about certainly the speakers list, and it's all for a very good cause. Maybe you can talk broadly about whether or not the universe of ideas is getting smaller or larger.
You know, I've been an activist short seller almost 14 years, and I think we always find reasons to complain about the universe of ideas or the markets. But bad behavior, it's not going away. Valuations have compressed a little bit, but there's still so much froth out there. And particularly because we at Muddy Waters, we look at things globally. So we'll do things in Europe, we'll occasionally do things in Asia. Yeah, there's still a lot of companies using misleading accounting. There's still outright frauds there. There are a number of stock promotions that occur, and especially, you know, there's always some hype cycle, right? So we're in the midst of this AI hype cycle right now. So we've seen a few shorts in our world already in the, fake AI space. So yeah, I think, really, I'm bullish on our business model, or at least as bullish as I've been anytime post the China obvious frauds imploding back in 2012, 2013.
The last time you were on, you revealed one of your shorts with us, and it was on the ESG front. I know you've been going after a lot of these ESG companies. You call them grifters. How is that going? HASI. So you accuse them of all sorts of things, I think, mostly funky financials and cash flows. I assume it's a profitable short for you. The stock has underperformed over the last year, but just give us an update on where you stand there.
Yeah, sure. So that was Hannon Armstrong, Hassie. The issues with Hassie were that their accounting is entirely legal, but it was volitionally highly misleading. So they produced all of these paper profits, but there was no or very little cash underlying that. And yeah, in an environment in which rates have gone up, what we've seen from Hassie and some of these other ESG really dumpster fires of businesses is that the stocks have underperformed. There could be more downside on Hassie. We did close out our short at some point. That was actually a little bit controversial internally because we developed this AI, talk about the AI hype cycle, but we did this pre-AI hype cycle. So we developed this AI to advise on when to close positions. And it did advise us to close Hassie at a time when the rest of us were sitting around the table and saying, like, I think it might have this one wrong, but since we've told investors that we're going to listen to this thing to some extent, let's close it. And yeah, we would have made more money likely if we'd held on to it. But in any event, we think that that's a lot of what we said has been ratified. And you did interview the CEO soon after, Jeff Eckel, and he refused to answer the most fundamental question that we posed, which was how much of your earnings were actually cash. He didn't say anything, and he just obfuscated. And, for people who kind of believed him, then rolled the stock down, it's been unfortunate.